Hey, Kevin here, top 1 financial advisor and best-selling author, and we are here to talk about the stock market. Want to give you 2 areas and kind of walk my theory out around what I think is going to happen in the market or what could happen in the market. There's always something unpredictable that could throw everything off the rails. But I do want to kind of guide you and kind of show you where I think the stock market is going and give you 2 areas that I think you want to consider investing in. And if you don't have exposure into this space, this is the time to really look into it right now. And it's not something that I think makes sense to delay and say, oh, I'll wait for another 6 weeks to jump into it because we're seeing the market move in this direction. I've been saying it for a while, and I'm going to give you about 7 stocks that you want to look into in this space to kind of give you a shortcut into what might make sense for you. Alright, so some of these we've talked about before. I've been talking about consumer discretionary stocks for a good minute. I've done a few videos on those. Make sure that you check those videos out. Consumer discretionary, that is the category of the market that, number one, did well when the market was falling all apart just a few weeks ago. We know the holiday season is coming up around the corner. We know people, for the most part, have been saving, and then come holiday season, people just spend a bunch of money anyway. A lot of companies in this sector include Dick's Sporting Goods. It's not on this particular list I'm going to give you today, but that's one that's still out there that, hey, it's a company that makes a lot of sense. Okay, so I'll give you 7 that's going to include both these industries. But that's the case. That is the case. Now, there is a risk in this industry, and there's a risk in every industry. Nothing is perfect. The risk is the supply chain, meaning I may not spend as much money as I want to if those products aren't available because we don't have enough people to get them from point A to point B. I talk about this all the time because I still can't get a PS5 and I'm still mad about it. However, that's money that Sony is never going to get from me until they fix that. And if they're not going to get their money from me, and let's say, times a million or whatever, how many people are looking to get that device, then that's less money. The stock market could react negatively to that company. That's kind of how these things could work depending on what company you're investing in, what the demand for those products are, and how people are going to react to try and get those products. The other risk is, well, what happens if people are buying now, which some financial experts and some consumer marketing people and stuff have been saying that people are doing now. It's not waiting. It's already mid-October. So if you are holiday shopping, especially for Christmas, you might want to start now. And I emphasize that because I have not started now. And I should not wait until the last minute. But you know me, I'm waiting till the last minute anyway. Well, the problem here is that if we have shipping delays, if we have delays in the mail, which we already know and dealt with last year, ordering now gives you plenty of time for that window to kind of do whatever it's going to do, and you still get your stuff on time. So if we are, as investors, anticipating with a buy in October, let this ride up, they'll report their annual numbers sometime in January or even February, and it says that you had this much money, the holiday season did this, and then boom, you've made money that entire time, and that's like the big announcement that you've made even more money. Well, if people start saying, look, the holiday season wasn't as strong, all it takes is a few headlines, and they say the holiday season wasn't as strong because it was divided up between October and November, or even before then, September included, then you might not see the pop that you think you were supposed to see. That's the risk. We saw this with Nike last year, where Nike sales just had not been great until they reported their quarterly earnings. It was a surprise. The stock was up like 13% on that day, and 2 days after I cashed out, which was the time for me to sell anyway, which I'm glad I did. I have no regrets there. But remember, it was June, and I said, hey, I evaluate my companies in June and December. So there you go. So it just worked out perfectly for me. Had it not been for that day, had it not been for that quarter, then I actually would have left Nike with a loss, which is not what I would prefer to do. If I'm going to sell a stock, I prefer to make money on it. So anyway, that is the consumer discretionary category. Again, at the end of the video, I'll give you 7 total of these companies combined that you can decide to do with what you want. The second one, we've been talking about this for a while, and this is the financial sector. I've got at least 2 more videos I'm going to do this week on the financial sector. We're going to break down some ETFs. I'm going to give you a comparison of 2 financial companies that I like. One was submitted from y'all, This is why we do this. Y'all submit good companies for me to compare and give you my thoughts on, and I do videos on them. So we'll do the ETFs, we'll do a comparison between two financial stocks, and I'll give you what I think is the best out of the two. Aside from all of that, here's the case for financials. Number one, it's already been good. Okay, since the video I did from December 29th of 2020, them stocks is up big time. All of the ones I believe we mentioned were up more than 50%, with Capital One leading the way. You can go check the chart on Public or on any other app that you're using, but I did a post there about what happened and posted the video of what I said back then. But we know, again, that with the world opening up, you're going to condense the losses that they had in 2020. That's number one. Number two, low interest rates have encouraged borrowers, which does help banks. And in no other sector, when interest rates go up, and they will at some point, we don't know what that schedule is going to be, then these bank stocks will continue to climb. Banking is a place that you have to be, meaning you can't not have a bank. Now you can throw the Bitcoin argument at me. I could throw the Coinbase argument at you, which is not a bank, but it is a financial company. I can throw the Square angle at you, which is not a bank, but still a financial company. And you still gonna be in the same spot. Y'all know I got Square. Y'all know we've talked about PayPal, and we talked about a lot of the banks. Those are the two areas I think are going to have the most success. Yes, you're always going to have the tech sector, but tech has not been as reliable as what we have known it to be in the past, especially this year. It's been real shaky. Amazon, I don't even know if Amazon's in the green right now. Amazon is struggling, and I'm not entirely sure why. That can be a separate video. Okay, that one can be a separate video. However, those are the two places in the market that I think are going to grow the best in the short term. Short term meaning like right now through January, December-ish. Come December, I'll put out a more in-depth video since it's an even 6 months at that point in time. But those are two areas, consumer discretionary and bank stocks. So before we go, or I say financial stocks and not just banks, but before we go, here are the companies that I like. Some we've mentioned before in other videos, some we have not. All right, starting off, this one we've talked about before, Goldman Sachs. Over the last year, it's up 83%. Depending on when you're looking at it, that number can change a bit. You had Capital One. I had Capital One. I might just roll Capital One for another 6 months, for another year or so, because it has been quite good. Next, JP Morgan. This is one you're gonna hear a lot about. Not because I'm a JP Morgan fan. I do not own this stock, but trust me, you're gonna hear a lot about it. It's kind of one of those ubiquitous companies, if you want to use a big word today, meaning if you got an ETF that even mentions financials, you gotta have to have JP Morgan in there by default because they're so darn huge. So that's JP Morgan. Then as we move into the consumer discretionaries, I got Target. Now Target has not been the absolute best thing in the world, I would say, over the last 2 months or so. However, it is up 39% over the past year. I do own shares of Target. They ain't doing all the best just yet, but if you go back from 2018 to now, it's hard to find stocks that were much better than Target. I am banking on this holiday season really pulling me out of the red. I'm only down like 2% from the time I bought it in, in June. Target's one of those long-standing companies. They're not going nowhere. I'm probably not going to sell it anyway because it's Target and they've been around. We know what the deal is there. But up 39%, put a feather in your cap. I think that's the term. But just put a note there for Target. All right, moving on into the consumer discretionaries. We have Etsy. I mentioned Etsy before. Over last year, up 39%. Ulta Beauty. Now, I talked about Estee Lauder. You can swap these out. Ulta Beauty, Estee Lauder, whichever way you want to do it. But Ulta is up 62% over the last year. Discounts, beauty products. Great gift ideas, I'm assuming. I don't know. I haven't bought them. But this is something that people gonna buy. And the stock reflects that. The company reflects that as well. And the last one is Bath and Body Works. If you have watched the video that I did on that, you know I messed up that name like a million times. So those are the 7. I'll work backwards, starting with our consumer discretionary stocks. Bath and Body Works up 146% over the last year. Boy, I wish I had this a year ago. Wish I knew. But anyway, we don't. We learn. We talk about it. All right, so Bath and Body Works. You got Ulta Beauty, Etsy, and Target. Those are your 4 consumer discretionary stocks. I think the playing field is set, and it has been set for a while. If we're going to be honest, I've been saying this for a good minute, but I think the floor is still set. This is the time to do that research and make a move. Those are your consumer discretionary stocks. Then financials, and there are many that I like. These are just some of the most popular names out there. JP Morgan, Capital One, I own Capital One, and Goldman Sachs. So that makes 7 total stocks that you want to look into right now, and the 2 most important areas that I think you should consider looking into as we're approaching this 4th quarter. I don't see things changing, but I also can't tell the future. But I don't see these 2 categories changing and it becoming, I don't know, energy or something random. But again, you never know. But those 2 areas, consumer discretionary and financials, those are the 2 places that I think most investors need to look. And the top 7, or the most popular, or just 7 stocks that you want to look into in those categories. All right, that's it for me. Stay tuned for parts 2 and 3 when I get more into financials and what stocks I like and our comparison videos. Lastly, make sure right now, there's a link below to the email list. I want you to click and join the email list. Why? Why do I want you to do that? Number one, we saw Facebook go down. You never know when it's going to happen, and we want to keep in touch. But more importantly, I'm actually sending out a survey on Thursday morning. I'm sending a survey, and I'm thinking about releasing either a new ebook or something that really helps people to understand the market a bit more, and you can do a lot of this analysis stuff. Ever since the Netflix video and the video that we did, Netflix podcast / video, as well as a video that I did on financials, people are asking, like, how did you know what was going to happen? And no, I'm not going to tell you how to tell the future, because I can't do that. But I do have a knack for understanding and dissecting companies and putting yourself in the right positions more often than not. So I'm considering either doing a monthly club or an ebook or something like that. I don't know. You tell me what you want me to do, and that's what I'm going to do. So make sure that you're on the email list so you can get the survey, and y'all can take the survey, and the survey is going to tell me what to do. That's how we got this YouTube channel. That's how I ended up on TikTok, because y'all said so. So make sure you're on the email list to take that survey on Thursday, and then I'll let y'all know what this next project is going to be. All right, now that is it for me. I'll talk to y'all later.